Okay students, today we will discuss about the Prorata Consolidation. So Prorata Consolidation in the sense the condition is all the assets and liabilities, income and expenditure of subsidiary company except share capital are added to the corresponding items of parent company. The problem: prepare a consolidated balance sheet under Prorata method from the following two balance sheets as on 31st March 2011. KNG company as a parent company, liabilities, assets. Equity 200, reserves 200, current liabilities 100, fixed assets 250, investments in Recon Limited 110, current assets 140, and the note is 60% acquired. Next, second subsidiary company Recon Limited, liabilities and assets. Liabilities equity share capital 150, reserves and surplus 30, current liabilities 30, fixed assets 150, current assets 60, total 210. Means amount, figures in thousand, figures in terms of thousand only. So before going to calculate we need to consider on working notes, means calculation of goodwill. So in case of calculation of goodwill, cost of shares acquired, just you can observe the problem balance sheet. The investment in Recon Limited 110 you need to consider, and the value of investment in the Recon Limited balance sheet, equity capital 150, means 60% of 150 nothing but 90. So 110 minus 90, the value is 20. And the next one is proportionate reserves. Means reserves in the sense, see the balance sheet, reserves and surplus, means 30 in the sense 60% of 30, total is 18. So 20 minus 18, 2 is the goodwill. So this prorata method can also be called as proportionate method also. So now the conclusion is consolidated balance sheet under prorata basis. So equity as it is 200 as per the balance sheet, reserves 200 as per the balance sheet. In case reserves and surplus as on 1st April 2010, means last year reserves, no need to consider last year reserves in consolidated balance sheet. If it is in a current year, you need to consider as per the calculations. So reserves 200, current liabilities 118, means you need to calculate current liabilities based on proportionate, means 100 is your parent company current liability plus 60% of subsidiary company current liability. Subsidiary current liability is 30, so 30 and 60% of 30, so total 118. Goodwill as it is calculated in the working note. Fixed assets 340, how in the sense 250 is the parent company and 60% of 150 fixed assets, so total 340. And current assets 140 in the parent company plus 60% of subsidiary company, so total is 176. Then the total consolidated balance sheet 518 in both assets and liabilities.